All right, good day, fellow traders. Once again, this is Michael Storm, also known as Robin Hood from ForexTradeRoom.net. I'd like to talk with you today about several different pairs, and we'll start off with the dollar index, which we can see has put in a very substantial rally in the past week. We had the fiscal cliff talks, and FOMC came out, and this really sparked quite a rally. U.S. dollar index has been on quite a tear. But before that, it was trading rapidly to the downside. It was an amazing looking channel working its way downward towards some very critical support. We had this right over here from October, and then right before that, September, there was a big low made over there where we rallied off of this area. This was deeply retested, which was a monthly buy signal, deeply retested. And then there was breakout. So as we're looking now, we've got this channel destruction underway, and the stochastic's currently very overbought. We almost made it to that low previously in October, came to the 886 fib, have significantly pulled up, consolidated, and broken out. But the thing is that I'd like to draw your attention to is this critical spot right up here, the daily 200 period moving average. We are still bearish because we are down. We're in a very long-term downtrend over the course of a great length of time, which we have looked in the past at this on a monthly and weekly chart. The dollar index is in a terrible long-term decline, and right now we're just having a corrective rally. So as we look at this pop that we have here, coming up to the 200 DMA and coming, well, let me go ahead and remove this so we can get a better picture. We've broken our downtrend line, and from this point we have a 100% correction, and from our recent high that was made all the way back in November, you can see now that we're at a 786 fib retracement. So let me blow this up a little bigger. I do have to remember Camtasia doesn't really record it quite as big as I want it to. So I'll make this really large for us all to see. Okay, the decline from November all the way to December was a big 1 month move, hitting that 886 fib almost, and then sharply bouncing to about 786 of this move. That's the key point I want you to see. As traders, we're looking for places to, definitely look for reversals. And right here at a 786 fib and a 200 DMA, I'm looking for a reversal. So as I look over here now on the 4-hour chart, I already see that reversal starting. We have a little bit of a gap right there that's been filled, and we've got beautiful 4-hour decline. All right, so it's very, very pretty. As the 4-hour start, it's really starting. And we do have more room to go on the downside. We could look for a fib retracement. And we're not even anywhere near the 382 fib yet, but eventually we can get there. Now there may be some signs of stalling when we approach that 382 fib and the rising moving average on the 4-hour chart. Right behind that, if we do break it, we'll have the 200 coming in. And then take note that by the time this ever happens, this 40 period moving average will definitely be moving up and coming right into where that 200, let me stretch this out a little bit, we've got a 200 and a rising 40. So when they meet each other, there will be a little bit more of, shall I say, support that the prices may not want to droop below. Now, we know our first area of support is going to be right here at the 382 fib and the rising 20 period, which is still, it's still going up. So we have several issues as time goes on. This right here will continue to rise. Let me just color code it so we can see it. All right, this will continue to rise, and we'll have our first very minor resistance when we come down into this level towards 80.40. Now probably bounce off of that level, eventually chew through it, hit the 382 fib, maybe a small bounce off of that level. Okay, so we'd be expecting this move, down, up, and then eventually down, right towards the 200. So that's what I'm looking at for at least the start of Monday and Tuesday. Now, moving along, getting outside of the dollar index, the reason I bring this up is because of the euro. And we see the euro has been hit across the board with a, well, first of all, we had that huge dollar move here where we were very risk on, okay, with AUD and New Zealand and everything. It was very risk on. And even the S&P, the stocks, I mean, they just went crazy. Things were wild. So we're looking at the euro now up here at 133. We have that triple top location right there. And if it did break out above 133, it would have been a very bullish move, but so far has not happened. Now, really quickly, just refresh your memory, looking at the chart, remember that the euro was in a beautiful decline for basically a year. It's an incredible decline. We had that channel that we were in, and then eventually we got out of this channel, and you can see right here we broke out of the channel, went higher, pulled back, went higher still. So what we've got is a new channel forming our way up, and that's giving us this bottom trend line. I'll go ahead and remove this so we can see it better. This trend line, I'll thicken it up a little bit, right here. And it's very clear. I mean, we can easily tap about 2 or 3 places. And right now we've got a decline towards this trend line. Now, I personally don't want to see it break, but if it does, it would be pretty bearish for the euro longer term if we break that trend line. But what I want to bring your attention to is the reason why we're expecting a rally on the euro in the coming month, I'm sorry, the coming week, is because of this move right here, from this point to the top. You see that we're down near a 50% fib. We're down near 200 MA. Being that we are so close to that 50% and the 200 MA and the trend line, and all of the other moving averages are just consistently rising, that is why I'm expecting a rally. And there's one other key thing, and it's that we have a very critical number right here, which is 130 with all the zeros after it, okay? So 131, 132 is something. Those are big numbers, and we can say those whole numbers, those round numbers, have some weight and some power to it. But as we look at 130, that is a very strong psychological number, and the market right now just does not want to break that number, and I personally hope that it does not break it and get too bearish. But I would like a rally off of this level myself. And looking at the charts, we've got a significant run here, 300 pips, in a very short order. And we can see that the 4-hour chart is already giving a very nice 4-hour buy signal, extra bar of follow-through, very beautiful. I do expect resistance, though, as we approach right up in here, which you can see above 131.50 and stretching up to about 131.75 area. That does look like really good 4-hour resistance, both based upon these key visual points that we can see. They did act as support in the time past. This was all supportive. Over here it was resistance. I mean, I have to jump pretty far back to find it, but there it is. Many days back, and you can see here that this support has given way. And this is what's putting us in the moving average. Crossover on the 4-hour chart, declining 20 period, declining 40 period. So when we get this bounce that will carry us up into this level, I don't expect it to carry us too far. Somewhere towards 131.60 and possibly 131.75, and that would be about all I expect right now. I don't have this move yet, so I can't look beyond this point. But each step of the way, there will be some trouble, of course. We've got the 3.382 fib, and then we'll have the 50%. And then as we get closer to our broken support, which should now become resistance, notice that we also have the 618 fib. So even if we do manage to sneak a little bit above 131.75, it'll be kind of hard to break 131.85. Nothing is impossible. Please remember that. This market has shown us that nothing is impossible. All right, so getting away from the euro, we have many other crosses that are euro-based that have done similar very dramatic moves, and this is why I'm expecting pretty serious retracements before we get further decline. Taking a look here at the Euro Canada, we did at one point have a trendline break, but then the rally after this break pushed us so high that we had to redraw the trend line. And as we redraw the trend line now, we can see it has a couple of places here that are basically holding, and then over here we've got this one. So here we are, time number 3. Okay, we've hit the trend line perfectly. I'll just put an arrow in there so we can see it. And not only have we hit the trend line, but we've hit a very substantial move as far as market quarters are concerned. We've fallen basically just underneath 132, so I can't really count it as 132, but it was pretty close. It was almost there. And the fall has carried us to 128.50. All right, so if we look at the amount of pips that this has traversed in such a short period of time, we are almost talking for, let's see here, 29, that would be 350. Yeah, we're not quite at 350. We're basically 3 1/4. 325 pip drop in a very fast period of time. Then you've got from this swing low to that swing high, broken the 618 level, touched the trend line, touched a half of a psychological level, never made it to the 786, thank God. That's just too far, too fast for me. I'm definitely looking for a bounce off of this. We do see a critical daily wick way back here in the beginning of December. Got a critical wick right there, and we haven't approached it yet. And already there's a bounce. We're starting to turn green. So this is a good pair. I'm looking for a bounce. We have that 4-hour buy signal. There is a problem though, and the problem is that you can see it. We've gone through the 4-hour 200 moving average, which is going to slightly act as resistance on the way back up. And not only that, we've got the 20 period, which is declining. All right, so with the 20 period, eventually, very soon is going to meet the 200. There will be a little bit of an issue there that we might not, on first pass, might not be able to crack that level. But once we do break the 200 and the declining 20 period, then we have a chance for a move that would carry us up a little bit higher. And as we look at that, we can see on the 4-hour chart, we do have the declining 40 period, which will be the next place to contend with. There will be some contention up here at the 382 fib, 129.70s. And then if we make it through that fib level, oops, hit the wrong button there, sorry. I'm trying to copy it. If we can make it through that fib level, right here, the 382 fib, and it just depends on the speed too, the speed of which this happens, we may eventually hit a declining 40 period right here, and the 40 period and the 50% comes in just over 130. So being that, we just looked at the daily and the 4-hour for both the Euro and the Euro Canada, we can see similar traits in this that, we are brutally down, we are expecting a bounce, and we're looking for the dollar index to slowly grind its way back down to some other level. And we're looking for these to slowly work their way up. Now this is going to take time because we're on a 4-hour chart, so we could be talking about 24 to 48 hours before we get anywhere up into this type of thing. And there's other charts that lend credence to this as well. Euro Australia, brutally assaulted, you can see on the daily. I'll just blow this up a little bigger. We've got a pullback down to weekly support, and we have a pullback towards the 200-day moving average. Not quite there yet, but we're hitting the 55 DMA. We've got a 40 and a 55 period moving average that are basically right at the same level. And if we do happen to sneak below this, which is still very, very possible, right underneath it, we do have the 200 period and the 100 period touching each other perfectly, basically at about 15 pips above 124. So if we get a continuation sink on Euro Australia, I don't really anticipate that we'll go too much below 124. Now, we might, as a super hard shakeout to the market, actually be able to do that, break that temporarily. But if we do break 124, even for a very brief period of time, I'd just be looking at this 786 fib as a fantastic place to hold. And the whole world would get ultra, uber bearish right there that, if you break the 200 and break the 100, it's such a classic signal of, terror and blood in the streets and all that. But taking into account this fib and, the whole number of 124, I just don't anticipate that we're going to actually do that move. But if we do, I think a bounce off of this move is highly in order. Very, very much in order. So, stochastics are still pointed down. I mean, I guess this is a, possibility that we could do this, but after that, I would be looking for a bounce. This one isn't shaping up as well as the other pairs that are euro-based. Now, Euro-New Zealand, similar hit that you can see, and this is the worst of all. We don't have any green. We have a 4-hour buy that has completely given up the ghost, so we don't know whether we're going to make a double bottom here or not, but so far, no signs at all. All right, and then moving to the euro pound. Now, me and our trade room the other day were actually kind of laughing about this because some bank, I can't remember who it is, they came out with a recommendation of shorting the euro pound basically right at those lows, right there. And I found that laughable. I don't trust banks, and I don't trust somebody to tell me to short the lows. And ever since that comment, it's just been nothing but rising. And I commented on that to everybody that I just couldn't believe the insanity that somebody would recommend a thing like that at the low. Why don't you tell us to short it at the high? Several days back on Twitter, I had posted a chart that we were either at or near a top. And amazingly, I called it 100% correct, but that was just unknown. I did not know at the time that that was the top. I said we are either at a top or we're near a top, and I did it on that very day on that green bar. So just a lucky guess, I guess, but what we were looking at was a move. I don't have the chart with me right now, but I had counted all of these out. There are 100 pip declines, there's like 168 pip declines and things like that. We were really looking for euro pound to make a big correction like this. You can see the channel here on the daily, and you see the declines are very nice. So we basically got what we wanted. I mean, this is the decline we were looking for, and it happened, which is a good thing. But now we're getting a bounce. You can see the 55 DMA, and if we put in our fib from swing low to swing high, we have our classic, break the 618 but not make it to the 786. And it doesn't always have to hit a 786 fib. I mean, if you've got a moving average in there or a trend line rising from the bottom, these are things that can easily help to slow a move down. So we've got a nice fall, 120 pip drop. We're too close to the trend line, too close to the 786 fib, and too close to the 55 DMA. And all of this acted together, and the market just took their profits, I guess, of that nice drop, bounced off of that level, and it's looking pretty good. So we have a nice daily buy bar in here. And with all the other euro pairs being so significantly down, I am expecting this euro pound to bounce. I'm looking at the daily buy, and it actually looks pretty good. We know that daily buys are often retested, so I don't see too much trouble that we should pull back a little bit and retest this buy as we draw our fib in right now from the swing high to the swing low. Can clearly see that we just broke that 382 fib, and we're getting closer to a wick right here. This is a daily wick that prices had hit, on a 4-hour and a 1-hour chart, and absolutely tanked from that level. So any bounce that happens so short term like this, traders are eager to say, oh my God, get me out of this trade. I was long up here, I was long up in these highs and we fell so low. I held on. I was hoping and praying that it would bounce, and now I got my bounce and I'm pretty close to break even, and I'll just get out of my trade and take a small loss. So there's a lot of people that do that type of a move, and I do expect this to pull back a tad from this level. But after that point, then we should see our bounce, okay? So I'll go ahead and clean this up a little bit and drop down to a different time frame. We can see the 4-hour is trying to put in a bottom. We've broken a 4-hour trend line right here. You can see the 4-hour came down, broke that trend line, had to redraw it, broke it again. So what we have right now, most likely, is a grinding channel on the 4-hour chart. And I do expect this pullback to, bring us much closer towards 81.18 or 81.15, and then a bounce off of that level. And you can pretty much see the same thing on the 1-hour chart. As we look at the 1-hour chart, we have some 1-hour support basically at 81.20, stretching to about 81.17, 81.15. So as we're looking at this, our anticipation right now would be that we have, this movement here will calm down, tap into this level right in here, this little box right here, and then get a significant lift off of this area that will eventually, break that wick and that wick, which will obviously be a critical place on a 4-hour chart. And by the time this happens, the 200 will be much closer to these levels. So we should tap into the 81.50s, maybe 81.55, and then have a small pullback before receiving an extra punch that I'm anticipating to go higher. Now, this is based off of my knowledge of the markets and how they work, and how they work in unison with each other over the course of time. And I've got 13 years of looking at this, thinking things through, watching it happen, and afterwards, seeing exactly, what's happened. So this is my thoughts. These are my opinions on the market right now. Just want to make that very clear. And as we look at the pound dollar, this will be our next one. We'll go over this pound. Okay, this is the pound dollar against the U.S. dollar. All right. So we're looking at the drop that happened was pretty substantial, and this was a great epic fail, actually. It was pretty, oops. I don't know how that got in there. I tried to clean all my lines up. So anyway, we're looking at far greater than a year's data. Let me try and just crunch it out so that we're looking at the past year. And we had a triple top that was in place right at about 163. And this triple top did break. 1, 2, 3. Okay, and we broke it and significantly popped above it almost to 164. That was a really amazing move, seriously. It was. But the fact that it happened, right after Christmas and, the New Year's and everything, the liquidity was low. And now, obviously, with our gift of hindsight, we can see that the market was having none of this. I mean, this was just not going to happen. And so the market participants chose to not allow the pound dollar to climb that high and have any kind of a close over 163. So it's a very serious failure, very powerful failure, and substantially down. As we look at the pound on this daily chart, we can see a couple of key things. Number one, the pop was amazing, and the drop was equally as hard. It was just like somebody being picked up and body slammed. It hurts very bad. And trying to get up on your toes and stand once again after being body slammed that hard is not an easy thing to do. It takes time, and it usually hurts so much it takes a lot of time. So as we look at this and draw our fib level in, we have broken pretty much everything. I mean, we've broken 50%, we've broken a 618 level. We've broken every single moving average here. We got a 55, a 40, a 100. It's all broken. So there's not a very good look, right now to the pound. It doesn't look all that healthy, but we haven't pulled back into a 786 fib, and we do have a little bit of daily support that you should be able to see here from November and the very beginning of December. This at least is somewhat supportive. And again, the key being 160, 160,000. Okay, strong psychological level, just like the euro at 130. We have the pound at 160. So this is a difficult, place to get through right now. Now, I'm not saying that it can't. I mean, it definitely could break this area, continue to get crushed, and work its way back down into the 159s. This is absolutely a possibility. But I don't think we're going to have that right away. I think for a few days that we should have this pop off of 160 and a pullback, because you almost have a 400 pip drop here, and that is a very large move. And again, looking at our dollar index, we just can't really see that happening right now. All right, and then the 4-hour chart shows pretty good 4-hour bounce, 4-hour follow through, but the classic problem right here, these critical wicks have been broken. They offer some resistance. If it's able to break the 200 MA right in here, you can see that it will have difficulty making it up above this broken support. So it will not be the easiest thing in the world for this pair to climb over 161. All right. But if 161 does break, then it puts us in a whole new light of potentially reaching right up here towards the 382 fib. Now, the problem with the pound is we've got the 40-period moving average on the 4 hours slowly working its way down, and this one is much faster. So as we look at the 40 and the 20 about to converge, if this takes too much time, the 40 and the 20 are going to reach each other, marry each other for a little while, and drift right into that 382 fib. If this should occur on the 4-hour chart, and you have both of these MAs hitting at the same price and place of that 382 fib, you have a quadruple resistance spot, and it makes it very hard to get above 161.15. All right, so I'm just looking at these numbers and the moving averages together. So we'll have a resistance spot, the fib, the MAs, everything working against pound to possibly be able to pass 161.15 on its first shot. I mean, on the very first try, no. No way. It's just not going to happen. So we can pull up here and attempt it, and then we're going to crack right back down again before ever getting another push that would carry us back up. This is the way the charts normally work. I mean, to some method or manner on what I'm drawing out right here, this is the way they usually work together. Now, not always. I mean, there's times, we're completely shocked and things go, dramatically against the way we would expect. But 8 times out of 10, that's it. All right, and then looking at the, again, we probably should take a look at the U.S.-Japan. This one here is due for a correction, and I'm really, boy, what's the words? Wow, very stunned, unbelievably stunned. I've been preaching for this pair to go to parity, and the only problem is I said it's probably going to take 1 year, or maybe 2, was my actual words. But I'm in shock over this. I mean, this is going. Well, we're not at parity yet. I mean, we're still 1,000 pips away. But this is incredible that we have such a magnitude like this. I mean, in a very short period of time, this is about 12 or 13% gain. I haven't done the actual math on it, but just looking at 78 and looking over here right now towards 88, I think this is somewhere around 12%, maybe 13% move in a short period of time. So we're hyperextended, and there's a correction that needs to come. Corrections are healthy. Corrections are normal. To have a move of this magnitude without having a correction is just absolutely whacked out, and it's impressive. I don't know what else to say. Very, very impressive. But I don't think that a move of this magnitude can continue forever. There at some point there has to be a correction. I thought we had it the other day when I saw this daily bar turning red, and it was looking like a daily sell. But before the day was over, the market did refuse to go through the 8660s that would have made it a confirmed daily sell. It didn't happen. Then over the course of the evening, this was right after the FOMC, by the way, which really put a fire under it, we ended up breaking all stop losses up here that were above the 8730s, probably millions and millions of stop outs that occurred in this level. And we continued to race higher. So it's one impressive rally, but I would not want to buy this high. I'm a long-term bull on US Japan, and I do truly believe in parity, that we will see it within a year, or well, now maybe even less. But at this moment I can't buy that high. I'm looking for a correction. Do remember we have a gap down here. The market does abhor a vacuum like that, and there is a gap to fill. I don't know when that's going to occur, and right now, it doesn't look like it's very forthcoming. But at some future point in the distance, and I don't know when it will be, it could be weeks, maybe a month, I don't know, I would be the most excited man on the face of the earth to see that gap get filled, and significant buying opportunity, by the way. If this gap is ever filled, I want to buy. I want to be long-term swing, parity, beautiful thing. But anyway, as far as U.S. Japan goes, it's just very hyperextended right now. We don't have any significant sell signals. We just have amazing prices, and trying to guess this top is incredibly difficult to do. And I don't think we should try and play that game. Trying to guess the top is tough. So looking at the pound yen, now even though the US Japan has substantially run again, pound yen has not. We don't have the same move with the pound yen. We have a confirmed daily sell bar that did indeed close as a daily sell. And it has a nice retracement, sure. It's got a nice pop right here. Let me stretch it out. You can see that pop. But it has not done anywhere near what US Japan has done. And this is a good sign. I like that quite a bit. Notice that we're only at the 618 fib retracement level right now, and we have not returned all the way up into these 142.70s high. We're nowhere near it. And this is the original daily sell, marked right here at the start. It was just underneath 142. So as far as the setup for a correction, pound yen is looking much healthier, a lot healthier. And the euro against every pair in the past couple of days has come down tremendously. Euro Canada, Euro Australia, Euro New Zealand, Euro US dollar, they were collapsing like fire. But you don't have that on the euro yen, you see? So the next one to drop, in my opinion, will be the euro yen. Let me just find it here. Where's my euro yen? There we go. All right. This pair has basically done the same thing. We've got a beautiful daily sell bar that closed right at the bottom. And the correction, once again, straight up. It's a little bit stronger than pound yen. You can see that it broke the 618 and is almost breaching the 786 fib right here. It's not quite at 115.50 yet, but awfully close. So I look at this as a beautiful resistance point. And if we take pound yen and the euro yen together and take a look at their 4-hour charts, should be able to see what looks to be the potential market maker longer term M-shaped pattern, which is something that we're really, really looking for on the 4-hour. So we have a beautiful drop. Here's our M shape, right? 1, 2. Second pass to the high, but not breaking it is our goal. Right there. Failure is what we're hoping for. The eventual turn. This is on 4 hours, so it's going to take a lot of time. Eventual break of the number 2 point. All right, and then we're looking for a pullback. Once this level gives out, we should have a pretty substantial move. The 4-hour 200 MA comes in way far down. So this could take a lot of time to pull back and reach this. I mean, it certainly hasn't in any time recently. But I'm looking for this to do a substantial move down over the course of a couple of weeks. So these would be my favorite shorts. Now, Aussie and New Zealand are still remarkably tough. They're the high-yielding currencies, and they have so much carry associated with them. We can see that the odd, as we look at it the other day, had an amazing fall. Just really, really large downdraft right there. And the correction has been equally powerful. It's just carried us off of the 103.60s and shot us right back into the 105s, which is a pretty awesome move. And then we have a failure up here at the 786 fib with a daily sell bar and another day of monstrous downdraft that's pulled us into the 104s. And again, look at how fast this thing always bounces. There are so many people lying in wait to purchase the AUD and the New Zealand dollar on any pullback that it's hard to get any sustained long-term fall on these pairs. And you can see with the 4-hour chart, it basically shows us just the traditional awesome 4-hour downward channel, then the 4-hour correction that started. Here's the big breakout, right? And then slapped right back down into support. And this is actually what we were looking for the other day in our trade room. We were actually looking for a buy signal right around 104, stretching to about 104.20. This is the area we said we should be going long, should be buying it, and looking for a nice pop. And we got that pop, but right now, it just seems a little bit overdone. And the way the Euro Australia, the Pound Australia is, the Euro New Zealand and the Pound New Zealand, I'll be looking for the AUD and New Zealand to pull back. So my anticipation is Euro and Pound will be bouncing, and Australia and New Zealand will be pulling back against the trend. Okay. Then over here you can see New Zealand did pretty much the same thing. We had an incredible 2-day mega rally. Let me just show you here. We had a drop from 84, and we had a drop all the way down into the 81.60s, which was amazing. It was just a little bit over 200 pip drop fast. Then we were looking for a correction on this pair, and the correction happened, came up here to right back up in here to 84. Oh, I'm sorry. My gosh, that's a 4-hour chart. I just messed up. Well, I'm too late into my video now. Can't edit this out. Scratch, disregard. I drew the lines in at the wrong places. Forgive me. I'm on a 4-hour chart, so I just messed up. Okay, here's the bounce that we were looking at, and it happened to 84, and it pulled back towards 82. We did not quite hit 82, but we had a 200 pip fall here, and we were anticipating a large bounce off of this level. And the bounce came in, pulled us up towards the fib. We came very close to the 618 fib on the 4-hour chart, and you see the 4-hour resistance right behind us. Just beautiful. That 4-hour support was broken, now becoming resistance, and very much am I expecting this to pull back off of this level, the 83 area to 83.20. It's very resistive. I'm looking for a nice pull down, which will give us the bounce on Euro AUD and Pound AUD, and the bounce on Euro New Zealand and Pound New Zealand. Okay, so, oh, I just lost that. That's no fun. Okay, we'll have to get that chart back up. The next pair that we want to take a quick peek at is going to be another AUD-based pair, but let me just fix my, my chart. There we go. Got it back now. Okay, so over a longer length of time, we are looking for Australia dollar to weaken up. And one of the pairs I like is this Euro Canada. I've been keeping my eye on Euro and New Zealand against Canada, and I'm sorry, AUD and New Zealand against Canada. and Aud in New Zealand against the Swiss franc. Looking at them as a nice benchmark for further moves. And this one here, I'll have to draw my lines in right now because I don't have them at this exact moment. I had them on a different chart, so please bear with me for a moment while we put our lines in. If you look at the swing high way, way back from last year, and you start drawing your lines, you come up with what looks pretty bearish, okay? We'll come down. There's three possible ways to draw this trend line, and I'm picking all three places right now. And then as we look backwards, way back here, you still see a nice channel working its way down. So we have a little bit of a triangle type of formation, right? I hope you can see that well. I'll try and scooch this up a little bit. It's very, very long term. It'll be more noticeable on a weekly chart or a monthly chart. So one of the key things about this pair right now that I like is the descending from above portion of the triangle. It's very descending, and the market is saying no to the higher prices. You can see right here we have the market saying no at the 104. It's about 104.25 location, and then again, I'm sorry, that's about 104.60. And then over here is about 104.25. So the market is saying no to these higher prices. Then we have a nice breakdown right in here. You can see a little bit of a daily triangle rising from above. I'm sorry, rising from below. And there's the breakdown, which caught us and carried us right down into these MAs. But the MAs are being a little bit of a stickler. Gosh, I hope you guys can see this. Let me try and widen this out a little bit. I want to make sure that this shows up for you. Okay, I'll even call out the prices just because it may not be so visible on Camtasia. But so we're looking at that breakdown underneath these prices of approximately 103.13, 103.30. and 103.30 again, basically. These are the levels. So once we got underneath these 103.30s, look at the down move right into the MAs. Caught it, held it. Great. Okay, that's fine. Look at the distribution in here. You see the wild whippiness in here. This is evidence of distribution. And what I'm really looking for is a break underneath this spot right here and that spot right there, which is holding, let me get the price. It is 102.65. What is that? 102.87. Well, we keep tapping 87 for now, so there's no real reason to really focus on that number. I guess the key will be 102.65. Yeah, 102.65 to 102.70. So this I find is a very important number, and in the days ahead, if odd starts to really break down and we make it through the 200 and the 100 MA, this I'm looking at as a nice dropper. Okay, the reason right now is we're only at a 382 fib, and that also helped to hold the move. So if I put the fib in, you can see it right here. 382 fib is holding right at this 102.65 area, and there's a reason that it's not dropping right now is because of the MAs and the fib level. But if we can break that fib level, it opens up a good door, a door to reach down to 102 for the 50%, and possibly even 103.70 for the 618 fib. So I'm liking that as a short, and it's just something on my radar. I'm watching, but it really hasn't triggered. And then, so we have AUD-CAD, we have New Zealand. Where's my New Zealand, Canada? Okay, New Zealand, Canada on a daily chart. Now, New Zealand has been stronger than Australia, clearly seen across the board. So we've got a beautiful trend line from below. Got a sharp drop, sharp correction here, just into support, right around that 100 DMA. So we have not broken 81. And it looks like it won't be the easiest thing to have this happen. For New Zealand to break and for Canada to get stronger and New Zealand to get a lot weaker, it's kind of a tough thing to picture right now, just knowing the way the currencies work and the fundamentals behind them all. This doesn't look like the easiest task on the face of the planet. So that's why I don't like this one as much as I like the odd CAD. I think odd will be a greater loser, and New Zealand will be tougher. But nonetheless, we still stand a chance of potentially, very short term, breaking this 80.94 and getting a droop down into the 200 MA. To potentially test the 200 MA and the trend line is a possibility, but I would not go short on a break of any of this right here. I think in a better way, it would be to look for shorts up high as you can possibly find them. The higher the better. I'd look for shorts up there for a false move that will carry us down towards these lows and then stop. I just don't see this breaking 80.65 right now. All right, and then another pair, which I really like, is the odd New Zealand. And odd New Zealand long-term has some really great potential. But right now, it's not triggering. And on the daily chart, we can see, let me just put in a fib so we have that visible as well. See that down here near the 786 fib, we got a beautiful rally. We received that daily buy that carried us up so high, and it was a remarkable move, by the way. It's just a fantastic short-term swing that carried us right up into a 618 fib, carried us right into all of that support right there, here, here, and here, which is 126.80s, basically right around the 126.80s. Carried us up that high, fell so hard, retraced towards this daily low, and we got a substantial bounce. Now, for a couple of days, I've been preaching, to my Forex trade room roomies that we should be looking for a short on this pair. And actually, I did end up getting short. I ended up getting 3 half-size positions short. And one of my first shorts was obviously caught a little bit too soon, so it went against me by, I don't know, maybe it was 40 pips. I'm not really sure exactly how much it went against me, but it wasn't that bad, and it was only a half size. So I ended up taking two more positions, and right now I'm out. I took a good gain on the last, but the other two just got out pretty much right around square because I didn't want to carry anything over the weekend. But long term, what I'm looking for on this is a retracement back down. Now we're going to unfortunately have 3 places to attack. We have to get through the 124.70s, and right there you can see the 124.50s, and right over here 123.70s. I don't know when. I do not know the day. I do not know the hour. Okay, I don't know when this is coming, but whenever this happens and you get through these lows, oh man, I'm telling you, if you look at the longer term charts, the weekly and the monthly charts, they seem to indicate a very strong potential move. I'm not going to bother to put up the weekly or monthly charts right now, but the potential move is awesome, and it does appear that it can carry us way down into the lower 118s, possibly even break that. I can see fundamental reasons, etc., why we might end up actually going much below that area, but for now, just because it's such a powerful level, I'm only going to focus on the 618 fib and say 118.50 is a potential move long term. Now we've got a trend line. It's not easy to draw it because a lot of these spikes don't occur at the exact same places, but you can see that we have broken a trend line now, forcing us to redraw the thing, okay? And as we look from above, signal, what are you doing to me? Okay, as we look from above, we have fantastic descending trend lines that are coming from this above section, way up high. Just depends on how you're going to connect them out, but they look really great, and they're declining. So we have a nice triangular type of a move and descending trend lines, but right now it's just fighting to break down. So one of these days soon, we'll be looking for a nice mega move on that pair. All right, and there's a lot more to talk about. Definitely, I'd love to go over more of these charts. Like the Canadian charts and the Swissy charts. But I know I'm a little bit pressed for time right now, and I'm not going to be able to do that. And I can't really get into the specifics of actual targets for a lot of the trades that we're looking for. But we do this on a daily basis in our Forex trade room. We spend about 45 minutes each morning going through a top-down analysis where we clearly draw out and map out potential trades, critical areas, highlighting key numbers and levels and things to watch for. And then really moment by moment, I mean every 5 minutes, 15 minutes, every hour, we are continually assessing and reassessing market action, news, fundamental drivers, you name it, everything we can get our hands on, and placing lots of scalp trades, lots of intraday position trades, and even placing swing trades that have 48-hour to 72-hour durations. And we'd love to have you join with us. We're looking for traders, and we're looking for people that are serious about trading, want to not only be taught, but also trade with us on a daily basis. And our goal for this year is to get higher than we've ever been before on our take that we take every day. Some days, I'll be honest, some days are pretty crappy and we only get 100 or maybe 200 pips or something like that. But we do have really great days where we're over 300-400. We do have days where we're able to get 5. And occasionally, we get days of 700-800 pips. They're phenomenal days. They're wonderful days. We love them. And we even get the rarity, which is not all that often, but there are occasions we can do as much as 1,000. But I'd like to have that every day, personally. I don't just want it once in a while. I'd like to pick up the pace and have that happen more. But my point is, we are having a special here that we had in December, and I thought about it afterwards. People don't want to join during Christmas time and New Year's. There's a vacation going on. Why sign up at that point? January, going into January, the traders are returning. The market participation is kicking up. Volume is kicking up. So we decided to leave it open for like another week, and that's actually ending pretty fast here. So there's just a few days left. Oops. Very little time, as a matter of fact, left to sign up. But if you do want to join with us, you can check us out on the web and forextraderoom.net, and you'll see that we've got a promotion in there that will basically give you a month for free. So if you sign up with us for 2 months, you get all of our training, our education, and you get a full quarter for the price of 2 months, which is a 33% discount. So anyway, I'm not a marketer, and I'm not trying to sound like a marketer or talk like a marketer, but that deal's available if you guys want it, and it's going to be a few more days up on the web. All right, so everybody have a great weekend and trade safely. And if you want to join with us, please do so. We'd love to have you aboard. And if not, that's okay too. And we'll try and put out more of these in the days ahead. And hopefully I'll get back on track because January is here now, so should get back on track for the trade of the day. I've been kind of lacking on that lately. But the problem really is just my Camtasia. It's just only available on one computer, and it's just messing me up. So that's why I really haven't been doing the trade of the day, because I have to unplug everything to load another computer to make it, and it's a real pain. So I only want to do it on weekends. But anyway, I'll see what I can do. If I can ever figure out how to fix the thing, I'll get it working. Let me think if there's anything else that we should really be looking at before I go. There is much more. I wish I had more time. Gold and silver. Let me just say this. Gold and silver are doing significant pullbacks, and they're very beautiful. I'm not saying, loading up with leverage, because leverage is a pain and it can really hurt you. But as far as a physical purchase or two, you never want to buy gold and you never want to buy silver when they're popping like mad. That's just not the way to go. You're basically looking for a bloodbath, and the only way to ever purchase this is when there is a bloodbath, okay? And it's not that often. It's really not. But when you get an epic reversal, like from where we were here at the 1750s, and you're pulling back into the 1630s, this is incredible. I mean, this is the type of stuff you wait for. You have to wait months for this kind of stuff, weeks and weeks and weeks before you get this. And right now we have that beautiful, beautiful move. So if anybody does not even own one tiny little coin, if you don't even have 1/4 ounce of gold and you don't even have 1 ounce of silver, you might want to start looking for hard downdraft days, to treat yourself as a New Year's resolution. Say, okay, I'm going to start buying a little bit here and there, but I'm only going to buy the dips. And I would highly recommend waiting for bloodbath situations. You are looking for gold to get the tar kicked out of it. I mean, literally slammed. And when you can find those slams, then you can, get on the phone, call the coin company and say, hey, send me a 1/2 ounce, send me an ounce, send me a 10-ounce bar, whatever. All right, so that's my recommendation for 2013. Buy some gold, buy some silver eventually. All right, guys, we'll talk to you again next week, and everybody have a great trading week. God bless, stay safe, and we'll talk to you again. Bye-bye.